So, servus. Um, this is just a completely separate section. Um, this is the meme fractal tracking section with a completely separate playlist where I will only show Bad Bath and Beyond, EMC, Jimmy, and Cause. What I'm using for tracking is always this on all other stocks, just because this is a separate video. I will explain it again. You always have your low point, your B and the A. After that comes a higher low, then the A point, B point, and the peak. Then you do your lower high. Then you do your midpoint, which is always connected to your M point. Then you have your T point, which is the last point to sell before you get your low. Then you can the next low can be a new lower low or a higher low, depends if the tracking is bullish or bearish. And the V under A after C is most of the time under the low of A. Only if you are in the B tracking, you don't have to do a V under A. But I will show that later. So let's start with Bad Bath and Beyond. For Bad Bath and Beyond, I will on all memes I will try to show the bullish and the bearish perspective without saying I'm 100% confident we are going next week like some other YouTubers are saying since, I don't know, 3-4 years. So let's start with Bad Bath and Beyond. You have your low point here. You have your higher low here. Your A is here. Your B is here. You have your top here. You have your lower high after that here. Then you fall. You take the trend line from your B low to your M midpoint. You see that perfectly. You bounce under the trend line, you bounce, you fall under it. You try to get over it, reject, fall under it. You come over it, you can't get above, hold above it, you fall in again, and then you you try to break it 2 last times, and then you fall. This is your T, last time to sell before you get your low for the bullish tracking. This would be a V. Sorry. This would be even your V and A under the low point of A and your higher low. And for the bullish tracking, this would mean you already did your A peak, you already did your A pullback, and what you're looking right now for is your next target would be $36. Then you take, let's say, because the peak can be a little bit under, a little bit over it. You take the low point of A, look for the B peak. Let's say the B peak is $36.80. Then you want to see the pullback. It only matters how you set your settings on the Fib retracement, 50% or the 0.5. So your pullback, if this is the true peak, would be something like this. Then you bounce and then you go to C. If you break all-time highs or reject here, doesn't matter right now. For the bearish version, that would mean we did right now T. And that would mean that your next target, you're going lower, lower, lower. For the more bullish bearish tracking, you are doing a higher low of your last low here. For the bearish tracking, you're making a new all-time low. And but after that, nothing really changes except A, because after that, you're making a higher low, you break, your A wouldn't be, no, the price target is still the same. Your A would still be 1250. Then you go to your B, and then you pull back, and then to your C. What you could even compare it to the past with this move right now, because that would mean, wait a second. So that would mean if you look at this, I will make that in. You will show that side by side, so it's perfectly shown. So bad button, yeah, here. You come from your M, you find your low, you come up again, you're making an M or a W pattern, depends how you draw it, and then your right side is higher. Same thing here, you're coming from your M, you fall, you're making your low, you come up and you're doing your M or W pattern, and the right side is higher. So next move, down. For what I'm leaning to, right now I would say 50-50. For confirmation levels, I would say if you break 874 to the downside, yeah, I'm not 100% because you should never be 100%, but yeah, that's bullish, and in my opinion, we go down. For the bearish, and we go down. For the bullish version, I want to see it break 15.93. Sorry, because then I would say, yeah, we are taking the bullish way, and the next target is 36. So now to AMC. I will start on the weekly. I mean, it's a nice chart. I know it's very low, but it's a nice chart. So to start in 2020, you made your V. I mean, V under A you can't see because it's invisible. So, okay, let's just say it was our V. Then we made a high-low. In here is your A. Then you made your B. You had your B pullback, and you got your top C. Then you made your lower high, which would be around here. Then you made your M. Perfectly with the trend line. You fall under it, try to get over it. You fall under it, you try to break it, you fall under it, and you and then you reject it here. This here was your T, of course. Last time to say to get to your low. After that, you got your, for the bullish tracking, I'm really saying for the bullish tracking, you got your V under A here, which of course is under this A. Right now, we are still in the higher low. This whole thing here is just the higher low. So if we are staying anything over 2.838, it's still a higher low. For price target after that, I'm looking at the at the daily. Here's the daily. For price targets, if this higher low is true, I mean, even for the bearish tracking, doesn't matter. The price targets aren't changing. Your A is at $76. Your B, because A is always near the T point, B is always near the end point. It can be a little bit higher, a little bit lower. Your B is at 152, and C, I mean, if you look at the pattern, it's a microphone. So there's a good chance, if bullish, that something like 600, 700 is your price target. For the even for the further bullish tracking, we just zoom in. So this was May. We made our V and A, the big V and A. We did our high low. Somewhere in here is A, somewhere here is B. It's just a few candles. You can maybe you can see it on the 1 second or 1 minute. This is your peak. This or this is your lower high. This is your endpoint. This is your last point to sell your T. And then we fall to V under A. For this year, this was your V under A. This was your high low. This is what your A, B, C peak. And now in here is your lower high. This is your M. This is your T. And now the tricky part comes in play. For the bullish version, for the bullish version, this has to be a V under A. The only problem is it isn't. And that's the sad part about this. Because some brokers show it's 1 or 2 cents higher, or it's just a double bottom. And that's the problem here. So if you really want to be bullish, okay, this is a V under A. This is your higher low. Finished. Your next target would be A, which is around 347, and B would be at 360, and then you go. The only problem I really have with this is because for me it's not V under A. That would mean that this isn't V under A. That would mean this isn't T, and this is T. And your next target is either this is your V under A, and after that you're doing a high low, and then you go, or you're making a new low. This is your V under A. This is your V under A. Then the higher low is coming, and then you go. It would even look better with the price targets for small A and B, because then your A would be 318, B would be 360. Yeah. For breaking points, just saying for confirmation, right now, if you break over 318, okay, bullish. If you break this higher low right now, let's say if you break under 272, no, we will do a new low. If it's higher than this or not, doesn't really matter. But yeah, and it will happen because it's just Fractal. It doesn't matter what the news is saying. It even doesn't matter if Adam is now diluting 500 million shares or vote or whatever. It doesn't matter. It's always doing perfectly what it should. For GME, we start on the weekly again, because that's interesting. For the weekly, this whole thing here is A, and this whole thing here is B. That's important because B don't have to do V under A. If, I mean, that's an absolutely catastrophic bearish tracking and version, which even I don't believe. if you just say this is your higher low, or yeah, this is your higher low, and this is A, your price target would be down here. That wouldn't even make sense for me. So for now, we're going for this is fucking big B, and this is really big B, A, and this is really big B. So we don't need to do V and A for this section. For further tracking, you have your B, you have your high low. Here's your A. Somewhere in here is your B. Here's your C. Here do you have your low. Now we can go on the daily. Yeah. Here we have our lower high. Then we have here our M. This is our T. And this is our V. And then again, here's our higher low. This is our A. This is our B. This is our C. Here's again our lower high. And now the problem I have with GME right now is this is M. I mean, you could even say for bullish tracking, this is M and this is hopefully T, but this isn't working because T isn't higher than M. So in my opinion, this has to be T. Next problem with this is M low should go and T should start with a low under M. That means this couldn't even be T. We are still waiting for something like that. Then you come up again. This would be your T. And then you're looking for V under A, which is this section here. So after that, you would come down, go V under A, make your higher low, and then you go. The thing is, to be bullish, for the bullish version, because everyone likes bullish versions, you could say this is T. I'm not believing in it, but okay. But even for that, I want to see. Yeah, for Jimmy, it's difficult. I want to see a V under A for Jimmy. There's just no way around it. The only thing, you could be bullish as long you're not breaking this. You could still say, okay, higher, low, higher, low, higher, low, and you go. But for now, I still want to see a V under A. Maybe. Let's see. Last thing, for cause. Cause is way cleaner. I mean, I know they are, or the series, they are all connected. And if one is going down, all is going down. So if you have bad tracking for Bed Bath and Beyond, cause and AMC, aber okay. For cause, again, this would be a big A, and this would be a big B. For further tracking, you have your B and A, B, high, low, A, B, C. Now we can go into the daily. This is your lower high. Here you have your strange M. Here's your T. And here's your perfect V and A. Here's your higher low. Your A, your B, and here's your C. And then you start again with, this is your lower high. This is your M. And here, this was higher, was it? It's slightly. For the bullish, more bullish version, let's say this is T. But still then, you want to have a V and A. You would go down, high, low, break. And because I said before we want this to be B, because if this isn't B, let's say this is high, low, and this is A, you're looking for a big V under A, and that would be something like this. It's not much different, but still. Only problem is, for the bearish version, really bearish version, this wouldn't be T. Because T is always lower than the peak of M. That would mean whatever you're doing here, you're coming up again. We checked here again. This would be your T. It's just time. If this is T or this is, it's just time. And after that, you're doing your B and A and high low, and you go. So right now, for me, the bullish version, no financial advice, of course. The bullish version of all these 4 stocks is we are finished in a higher low and we should see upside. If not, all of them are in a point where they are exactly at T. For the bearish version, Bed Bath & Beyond is at T and will go to a higher low or a new all-time low. For the bearish version, AMC right now is still looking for its V under A, or even a new all-time low. For the bearish version for GME, exactly the same. We are looking for a V under A. For COS, absolutely the same, V under A. Because, okay, makes sense because they all move in sympathy and so on. For time-wise, bullish, you should see most likely in the next, let's say November, December, you should see something. For the bearish version, I would even say end of January, February, March. But yeah. But let's see. If you have questions, I will update these ones not every day because they are not really moving fast. But just saying, because I also came into tracking because of these stocks. And when I hear YouTubers saying, don't play anything else, if you have don't have a position, you will miss it, blah, 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 blah. You can look at my other videos where I have all the other stocks. I had at least 5 to 6 plays this year alone with 1000% contracts. It's, in my opinion, it's way more clever to play other stocks and just wait for the perfect entry on the memes and saying 100% we are squeezing next week every week because of OPEX, fail to deliver, cutting rates, and all this bullshit. How many times do you want to believe these people since 4 years? They were always wrong. Just think about it. Okay, thanks for watching, and hopefully see you next time.